Welcome back to FinTech Festival India's Ahmedabad Micro Experience, everybody. The FinTech business in India is expanding at an exponential rate, fueled by a strong Indian startup ecosystem, rising smartphone penetration, and changing digital infrastructure. With around 4,930 FinTech businesses in India is one of the fastest growing FinTech markets. The FinTech usage in India is also increasing quicker than many industry professionals have predicted. Now, in our next session, our panel will be discussing the rise of startup ecosystem in India, as well as the state of digital infrastructure in India, while also touching some points on the payments ecosystem and crypto ecosystem, along with data protection, data capture, and monetization. This panel is moderated by Mr. Samir Mahajan, who is the director of Stride Ventures. And Samir is joined by Mr. Vaibhav Joshi, Chief Digital Officer, Equitas Small Finance Bank, and Mr. Naganand Doraswamy, Managing Partner and Founder of Ideaspring Capital. And rounding off this panel will be Mr. Subramanya SV, who is the co-founder for Fisdom. With that, the panel is all yours. Over to you, Samir.
Thanks, Amit, for introducing us briefly. Why don't we just start with our brief introductions for the sake of the panel. Let me quickly begin with mine. So I'm Samir Mahajan, Director at Stride Ventures. Stride Ventures is the leading venture debt fund in the India. We are currently in a fund to journey with a $250 million size, and we have more than 50 portfolio companies in our bouquet. We are the ones who've been pioneered in terms of coming up with the new structures on the debt side, pertaining to the working capital supply chain. A lot of initiatives would be seen in 22, and we're quite excited to bring those initiatives. Also quite excited to be partner with the team over here and talk on developing the FinTech startup ecosystem in India. Just over to Mr. Naganand for a brief introduction. Thank you.
Yeah, thanks, Samir, and glad to be here, and thanks for inviting us here. Ideaspring is an early stage fund focused on supporting product innovation startups in India. We typically invest pre-revenue in product-based companies. Fund 1, we invested in 16 companies, and we have raised Fund 2, and then we are investing from our Fund 2 now. Again, all B2B or B2B2C, and that's what we specialize in. And our key differentiator is also the fact that in addition to giving money to the entrepreneurs, we spend a lot of time with them on various aspects of messaging and product positioning and building for global scale. And all people in the fund are entrepreneurs in their previous life, so we are enjoying working with all the entrepreneurs.
Great, thank you, Mr. Subramanya. Why don't we start with your introduction?
Yeah, hi everyone. Thanks for having me. I'm Subramanya. I'm co-founder and CEO of Fisdom. We are a digital wealth management platform that offers customers solutions across savings, investments, and protection. It's a consumer platform that helps customers solve their financial problems. In terms of our go-to-market, we partner with several banks in India. Close to 12 banks work with us, where the bank's customers use Fisdom to buy stocks, mutual funds, pension funds, so on and so forth. So that's a quick background about me and Fisdom.
Great. Over to you, Mr. Vaibhav Joshi.
Thanks, Samir. Good afternoon, everyone. This is Vaibhav Joshi. I'm the Chief Digital Officer with Equitas Small Finance Bank. I've been with the bank for a year now, and in my capacity as the CDO, I take care of the FinTech and neo-banking programs over here. I take care of digital transformation. I take care of digital channels. I take care of digital sales as a separate P&L, digital business line as a separate P&L, my bad. Previous to Equitas, I was associated with Yes Bank for 6 years. I was one of the founding members of the digital banking team over there. So during my stint with Yes Bank, I worked with almost 70–80% of the FinTech ecosystem in the country, and a lot of who's who unicorns who are there in the country today. Previous to that, I've done my own startups. I've run 3 startups of my own, one in tech, one in payments, and one in the food industry. The food industry startup is still running, 9th year into its operations. And previous to that, I was part of the team that launched Aadhaar in the country in 2009. Over to you, Samir.
Great. Thanks, Vaibhav, for your brief introduction. So let's open this session. Just a quick some sort of a summary from my side on the FinTech startup ecosystem. In 2021, we have seen a lot of acceleration happening in this ecosystem, and FinTechs are changing access to financial services, be it payments, neobanks, lending, insurance, stockbroking, you name it. I mean, we've seen an acceleration in those. So Indian FinTechs have seen a record $9 billion investing into those companies, with 11 unicorns coming out of that. And we've seen first time ever the fintech listing happening in India on stock exchanges, which is Paytm. So with that thought, I'm honored to be part of the FinTech Festival India and really excited to talk about the developing fintech startup ecosystem in India. So now we can start with a session with our wonderful panelists we have today. I would like to start with Mr. Naganand. We've seen fintechs have been the buzzword and we've seen a lot of acceleration in a decade or so. So a lot can be attributed to government policies like demonetization, GST, and many more. But also we have seen recently with the COVID impetus on the digital economy. So how do you see this fintech startup ecosystem is being evolved in India?
So I think in addition to COVID and other aspects, I think what differentiates India, really is the approach the government is taking in terms of various platforms, right? I know Vaibhav was part of Aadhaar, and on top of it, you have built UPI, which has changed, is the game changer. And I think no other country in the world exists where you can say, I'll do a 5 rupee transfer from one number to another number, and I can do that. And I am ICICI Bank, whatever. I have an app. I can say, I can go to my contact and say, give 5 rupees to this person, and it happens, in the next second without any charges, right? So I think in terms of the platforms, so whether it's UPI or other account aggregators or what you're seeing in Open, we have been kind of the trendsetter across the world. I don't think there's any other country in the world where the government has enabled so many platforms to come into existence, where the industry is participating with the government to enable us these aspects, right? So UPI, you talk about WhatsApp, they are part of it now. Google is part of it now. It's a transformation that you're seeing in no other country in the world. And it's not happening only in the consumer side. Now it's also percolating and proliferating into the enterprises as well, right? With Open coming into play, you would assume that based on GSTs, what has been filed in GSTs, what the company's capacity is to kind of take on credit, and a bank's ability to just get this data dynamically and make a quick determination of who can they give credits to. And we know that's been the bane for all SMBs in India, wherein it's been very hard for them to get those kinds of credits. I think these aspects are really game changers. It's very, very exciting time in our country. And we have leapfrogged more than most of the other countries that exist in the world, because they are using us, they are coming to us to say, how can we learn from you, and then what can we do to enable? And then MOSIP is as you know, is one of those organizations that exist that is now taking Aadhaar UPI to other countries and helping them evolve. And we are really truly becoming a soft power in the world, specifically in the finance segment, because of all the platforms we have built. So with the mobile penetration, with these kinds of platforms coming into play, I think there are a lot of game-changing activities that are coming into play, and we can also discuss the data architecture and data privacy that we are talking about a little later. But very, very exciting times, and very happy to see our country take the lead in providing these platforms, both consumers and enterprises can benefit from.
Great. You rightly mentioned, Mr. Naganand. I believe the country has seen a different acceleration altogether with respect to the Aadhaar, UPI, and other payments infrastructure which is being built. So just thinking aloud, why don't we just compare it with the stacks in the developed economies like US, Europe, and Singapore, etc., where we're standing today? What's your thoughts around that?
I think no comparison between US and the US is way behind, right?
Right.
I don't even want to compare US and India when it comes to digital banking. I'm happy to say that, but typically we don't get a chance to compare ourselves to the US. I think we are far ahead. That's a great thing, and only because of the fact that it's like landlines, right? India leapfrog. We never had landlines. We completely leapfrogged into cell phones. So we had that benefit of kind of bypassing one whole era of banks and other things. So I think we have had the advantage there. I don't know much about Singapore, so I will not compare and contrast to Singapore, because I know in Norway we had some business before, and they were looking at digital payments and then banking without branches and so on and so forth quite early on. But I think we clearly are taking the leadership role when it comes to finance infrastructure and digital banking and ability to do quick transfers and so on and so forth compared to any other country. We can safely say that.
Great. Thanks a lot, Mr. Naganand, for your important views around this.
If I can add, Naganand covered the whole government aspect, how the whole Aadhaar stack, etc., has been, huge boon for us. But I think, regulators, incumbents, venture ecosystem, entrepreneurial ecosystem has also sort of reacted to this extremely well. My sense is some of the work that regulators have done in India in terms of accepting, Aadhaar as a framework or OCIN as a framework, I think that's been just phenomenal. Incumbents, I mean, the larger incumbents like ICICI Bank or some of the newer players like Equitas have been pioneers in embracing fintech players as well as being open to work with fintech players, either in a partnership model or on their own. I think that's been quite phenomenal. And finally, the VC ecosystem and entrepreneur ecosystem, right? I think fintech probably had the highest amount of inflow last year, probably from a market share perspective, if I could define. I think fintech probably attracted most amount of money last year compared to all other segments. And I think there's a very, very fledgling entrepreneurial ecosystem that is supported by angel investors, connects with industries, banks. So I think the whole ecosystem today, I would say, is flourishing, and it is absolutely the best time to be a fintech entrepreneur.
Great. Thanks, Subramanya, for adding your views around it. So over to you, Mr. Subramanya, for the second piece, which just wanted to understand. So see, we all believe data has become the new oil in the country. And from a B2C fintech founder perspective, can you throw some light on how do you see we can leverage data in making financial decisions? Also, from your investments, from your industry perspective, what sort of future innovations you're foreseeing in the coming times? Over to you.
Yeah, look, all fintech companies at the end of the day provide a financial service. Like either we are providing a financial advice, or we are selling insurance, or giving a credit, something or other, right? So technology is playing the enabling role. But the big difference is, we could use data more effectively to provide that service. And if you look at each of these sub-services that you provide to end customers, data plays a huge role. For example, let's say credit. With every incremental information that we have access about the customer's life, the credit decision is better, right? We call credit in India lending, but frankly, it's a business of recovering and not lending. So I don't know who called it as business of lending. It should be called as business of recovering. So business of credit is almost like finding those people who have a ability to pay and an inclination to pay. And there's only so much you can assess by looking at the customer and visiting his house. I think data speaks a lot, right? So ability to process payment data, bank transaction data, so on and so forth. There's so much that's GST data, and data processing today is really, really fast. One can ingest a large amount of data and throw an output in real time, which is what sort of the OCIN framework is gearing towards. If you look at insurance, today, India doesn't have a strong framework for usage-based insurance. They say, I have a car and you have a car, same car, you drive 10 kilometers a day and I drive 100 kilometers a day, we pay both same insurance premium, right? And that shouldn't be the case, right? I might be a riskier driver than Naganand, I should be paying a higher premium. Now, as more and more of this data starts flowing into the decision-making framework, the ability of insurance companies to personalize and configure products to them becomes just significantly higher. And I think IRDA is moving in that direction. Coming to wealth, where we specifically we at Fisdom operate, again, the more information we have about the customer, the better it is. When customers use, let's say, any product, we know only what he or she has on our product. There could be 5 other things that the customer has. And the more information we have, it just sort of, significantly makes us better. So this whole account aggregation framework, for example, helps in getting information, having access to information about the customer's, financial life. So it just makes the whole financial service provision better. And of course, all of this has to happen with the consent of the customer. We need to respect the whole data privacy. In the absence of that, what's currently happening, when we are not using data, which I'm sure all of us and a large number of customers are bugged, is basically spam calls, auto calls, spam SMSs, and emails that are not, because I'm sure each of us have seen emails being sent to us, we just feel like, hey, listen, I'm even being sent, and the reason is no one is looking at that. So I think the opportunity, the first leg of fintech was, I would call it as access. Very few people have access to wealth, insurance, and credit. You make payments, you make it accessible. So now the next whole wave is personalization. Now how can I get something different that's compared to what Vaibhav gets, so on and so forth. I think there the companies that develop and use their own proprietary data while complying with all the regulations of data privacy, etc. I think they are the ones that will probably likely to win the market.
Great. No, Subramanyam, I really agree with you with your thought process. And you rightly mentioned about that insurance example, which is very, very relevant. As per the usage, is there any some sort of developments coming around those products or on those innovations? So we'll see. Definitely 22 would be full of action coming in the pieces which have been missing still. Vaibhav, request your views around the data, because I'm sure the bank is another element which we all know, which really leverages on the data and look forward to have the data consumption so that they can really monitor and they can really leverage on those data related to consumption and all. So what's your thoughts?
Sure, Samir. So like, Subramanya rightly pointed out, there are a lot of aspects that have evolved around data, and the decisioning has become a lot more different. And banks as well as fintechs have started approaching it, in a very, very real time, in a very, very practical manner. And let me, practical being the underlying word, because what happens is traditionally banks and financial institutions have been used to, getting data from this institutions like CIBIL, CRISIL, and so on. And that's a very standard, format in which the data is fetched, and then there is a particular point-based system that is tagged, and then a particular number is derived for an individual who is looking at lending, or for an organization which is looking at lending, and then possibly that data is used. And I'm talking from a lending assets perspective. I'll come to the payments and other perspective. So what has started happening, Samir, over there is now alternate data has started chipping in, and alternate data has become a very, very important form factor in deciding these factors. Okay, in credit decision. And that is where, earlier where the decision used to be basis data, now the decision is basis the, formal data that we have and basis alternate data. And that is where a lot of unstructured products have also hit the market. You see nowadays buy now, pay later. You see nowadays, on the go credit that is being given. Okay, you see postpaid products that are coming out. Now, how are these products evolving? These products are evolving because of, a lot of alternate data that gets generated at the back end. In some form, that alternate data is used. Some analytics is carried out on that, and basis that, a particular decision is arrived at, hey, Samir is definitely worth taking this much risk on. So, hey, Samir, your Ola postpaid is going to be 5,000 rupees. Hey, Naganand, you get a limit of 5 lakh rupees on Money Tap. Hey, Subramanya, you get, a lazy pay limit of 10,000, so on and so forth. These are buy now, pay later and postpaid and, unstructured credit limits. Now, if you look at, something like liabilities, okay, or something like payments, then also what happens is that consumer behavior. So if you're talking about having a savings account, having a current account, having a OD, or if you're talking about, doing UPI transactions, IMPS transactions, NEFT transactions, either directly or through API banking, that's where the open banking comes in. What happens is that consumer behavior is extremely important. Okay, how many times am I using digital as a payment mode? Is digital my preferred payment method? Okay, then what is my age group? Okay, what type of spends am I doing? Where all am I spending? How much is my income vis-a-vis what is the percentage of money that I'm spending? How much am I saving? How much am I investing? What are my insurance spends? See, this is all data that is getting generated. Okay, now whether that data is getting generated in a single app or whether it's getting generated across multiple apps, finally there is a data ecosystem that is getting created. How best do we as financial institutions and do our partner fintechs utilize that data is the function of how better products can be offered to the consumer. Over to you, Samir.
Absolutely, Vaibhav. You really captured it in a very beautiful way, and it was so insightful to get views around the data. And I'm sure banks are way to go in terms of utilizing this data and behavior patterns and coming out with the different products, as you mentioned. So this thing from Vaibhav. So we've seen neobanks in India has been coming up rapidly, and by offering individual banking experiences to the underserved customers, and fintechs have also gained a lot of capital here, right? So just to understand the collaboration between traditional banks and neobanks, we've seen they've been catering to the underserved economy. So could you please comment on the future innovations which are coming in these legs covering neobanks and traditional banks?
Sure, Samir. So there are multiple models through which neobanks and fintechs have been partnering with traditional banks. But before we get there, we need to I would like to slightly spend some couple of minutes on understanding where this all started. Okay, so see, earlier we used to have these technology service providers who would create financial products, and they would work as TSPs or service providers for the banks, and the banks would work with them. And now, how different is that from a fintech today? Okay, all the banks, earlier there used to be branch banking, then it became TBA, total branch automation. We moved to core banking. We moved to ATMs. Then we moved to interoperability. Then NPCI came in, and then RuPay came in, and so on and so forth. We moved to NFS, UPI 2.2, and so much innovations have happened. Okay, so what is it that a fintech brings to the table that a traditional technology company has not been able to bring to the table? And then why is it that fintechs are now also becoming an enabler for the ecosystem? See, those traditional technology companies have been creating technologies and offering them as a service provider. What fintechs brought to the table was also the distribution, the hyper personalization, and use case driven products. Now, Samir, that is the underlying point, use case driven product. If I talk about the fintech ecosystem in the country today, we talk about payments, we talk about liabilities, we talk about assets. Okay, these are the three primary banking products in which fintechs work on. And then there are non-banking products such as insurance, investments, maybe regulatory tech and so on. Now, when we talk about the entire fintech ecosystem in India, there is a lot of scope. Okay, but when these fintechs are, and why these fintechs are creating use case specific product, let's take the first case in point. And I do like to talk about this. That is the millennial segment. So millennials are somebody who want banking, or they want services at the touch of a button. Everything should be now. There is nothing that is after half an hour, after 1 hour, or tomorrow. If I am looking for a particular service today as a millennial, then the service has to be available to me today, immediately at the click of a button. That is what millennials wants. Okay. Now, for a bank to cater to this millennial, bank has to look at a lot of issues such as regulations, compliance, operational risk, legality, so on and so forth. Okay. It's not difficult for a bank to provide an agile method of delivery. Okay. It is not impossible, but it is definitely difficult. And why? Because when a bank creates a product, it has to capture all these aspects taken into consideration, and then it has to also do a lot of regulatory reporting. Now, fintechs do not have this particular, let me use a crude word, baggage. Okay. When fintechs don't have it, that helps fintechs to become a lot more agile. The entire back-end core technology where the entire regulations, compliance, and the operational risk reside are actually managed by the banks, and it becomes a lot more agility-driven, servicing for the fintech. There are a lot of fintechs who have been doing tremendous amount of innovations also on the tech side and helping banks, and financial institutions transform. So that is the TSP side of the fintech, and that's also a very, very growing sector. Now let's talk about another sector, which is MSMEs. Okay, MSMEs also require use case driven products. They may not require a here and a now, but they may require products where an extended lending, or a sachet insurance, or a unstructured OD, or a fixed deposit where the amount actually can be customized and the tenure can be customized. Now these are all innovations. For a bank to create these kind of products into its core banking system, let me tell you, there is a plethora of approvals, there is a plethora of process that is required for the bank to do that. But at the same time, if the fintech has to do that, it's relatively easier for the fintech as compared to a bank or a financial institution. Okay, because fintech again doesn't have all those regulatory hurdles. So when a bank gives a standard product to a fintech, and the fintech is able to then customize and create it as a use case driven product, that is where the collaboration works extremely successfully. Now the fintech can work on the distribution, the fintech can also work on the technology, and we have seen both these use cases. Okay, the models are B2C and B2B2C. There are also B2B models. Okay, but we will talk about B2C and B2B2C because that's where we have seen maximum of unicorns happening in the country today. So on the B2C model, millennials, MSMEs, blue-collar worker, white-collar worker, fintechs are working in creating ecosystems over there. And when we talk about B2B2C models, there are a lot of new age companies which are coming in. We have seen Setu, we have seen Hyperphase, we have seen Decenter. There are a lot of good companies which are coming in this space as well. Whether we talk about, regulatory tech, whether we talk about compliance tech, whether we talk about insure tech, whether we talk about payments, whether we talk about, liabilities tech, asset tech, digital lending, so on, unstructured, structured lending, so on and so forth. There are a whole lot of fintechs that are coming in. So the models, for the future, are good amount. There are good possibilities, Samir. Now, from a banking perspective, unfortunately, there are only certain regulations that allow us to partner with a fintech. Okay, let me spend 2 minutes on it before I hand it over to you. So one is from a regulatory point of view, there is no laid guidelines in terms of how a bank and a fintech can come together, though we are expecting some draft guidelines on that part. But one is where a bank appoints a fintech as a standard TSP or a technology service provider. Second is where a bank appoints a fintech as a business correspondent, and where the fintech can carry out a distribution on behalf of the bank as well. What happens is banks are often restricted from partnering with fintech for other products, because banks cannot distribute non-banking products. So that is a challenge that happens at the banks level. So banks are limited from that perspective, but largely a combination of a TSP or a BC or a BC plus a TSP, and in some cases a program manager, is how the banks actually partner with fintechs. Over to you, Samir.
Thanks, Vaibhav. It was really insightful, and thanks for touching upon the regulatory and compliance aspects also in your discussion. Glad you've mentioned a couple of instances where we could relate that a lot of innovations have been done, and a lot of things we could relate with the past history and the data piece. So now we can start with the Q&A session, which where the audience have been really excited to ask certain questions from our panelists. I'll request Naganand to just share his views. So the first question is, does India need simpler tax system, especially to this fintech startup ecosystem, to sustain this booming?
I think policy and tax, there's always improvements, right? And we are all clamoring for that. If you talk about all the SaaS companies, they want easy way to get money in and so on and so forth. So there's whatever you do, there's always less. So I think there's much that can be done with respect to both the taxes, whether it's GST, direct and indirect taxes, both, right? And there's quite a bit that can be done. And also in terms of enabling the ecosystem, I invest in a lot of SaaS startups, and any policy change that comes in, trying to get payments in India for a SaaS company from outside is a nightmare. So yes, obvious answer there to yes. And the good news is the government is listening. There are a lot of panels that they have, and the budget session is on. They are talking to a lot of us, we have had quite a few meetings with the governments as well with respect to VC investments and what can happen with respect to the VC industry. So they're listening, and we can do quite a bit more in terms of tax and policy. And like I said, it is never enough. If you fix one, you'll always find something else to fix.
Great. No, Naganand, you rightly captured it. So second question coming from the audience is on the favorite topic these days and the buzzword on the crypto side. I would request Subramanya to comment on that. The question is, so recently we've seen a wave of crypto and blockchain related startups coming in. So whether this could really derail the future of the startup ecosystem in India, or this can act as a accelerator for the Indian startup ecosystem. Over to you, Subramanya.
No, great question. Look, it will certainly not derail the startup ecosystem. It has created a certain alternative, positive energy to the overall ecosystem, because here is a set of things that did not exist 2 years ago, and guess what? It has become bigger than many other incumbent ways of investing, right? So I think it's taken everyone by surprise what you can create with entrepreneurial energy, technology and capital. When it comes together, you could create something that didn't exist just even as recent as 2 years ago. So I think it's certainly overall a positive for the entrepreneurial or the fintech ecosystem. About the future, obviously, a lot depends on regulations in terms of how it is treated as an asset, and how it is regulated from a tax perspective, from an investment asset class perspective. How is the proliferation of the asset classes regulated by the relevant regulators, because definitely it requires regulation, because one of the reasons why we've seen it exploding is also because it's been sort of unbridled, if you will. Actually, it's more than unregulated, right? That's how it's grown. And that will obviously come to a pause in the next few weeks, few months, as and when the government decides to roll out its regulations. So I think regulations will decide and should define sort of the framework for future growth. The technology is very, very relevant for the whole blockchain. Technology is useful in so many different applications. Whether crypto as a currency, I think the general consensus is very clear that it will never be a currency in India. But as an asset class, if people want to invest and trade, there is very little one can do, and the best thing the government can do is to put together a regulatory framework so that the investors are protected around it.
Great. Thanks a lot, Subramanya, for your valuable inputs on this. The third question from the audience is on another important and critical topic we discussed, data. We request Vaibhav to share his inputs because Vaibhav, you touched upon the alternate data. So the audience has been really curious to understand how's the alternate data being extracted and what's any specific tools or methods to measure that. Also, if we can touch upon the CAGR of the fintech in the next coming years and the growth which we all have been discussing. Yeah. Over to you, Vaibhav.
Sure, Samir. So I will touch upon the first aspect of it. See, what happens is now all these fintech products that are coming into the market, they generate a lot of alternate data. Okay, so whether we are talking about a small payments app, whether we are talking about an app that talks about doing a savings account plus investment. Take NeoX, for example. Okay, it's a neo bank that we launched, and it became so popular that within 9 months, we have 1 million plus active users, 1 million plus users, okay, and we have close to 2 million downloads. And the type of data that gets generated and the usage patterns that we see, it is phenomenal. Okay. Now, whenever you download a particular fintech app or a neobank, you tend to carry out certain transactions. You register yourself. Okay, so some data gets generated during the registration process. Post your registration, you carry out certain basic activities. So it might be payment, it might be bringing in money into your savings account, it might be booking a small fixed deposit, term deposit, it might be paying for a pizza, it might be splitting your bills with your friends, it might be buying a small insurance, it might be booking a small travel. There are so many aspects that it might be paying a phone bill via BBPS, Bharat Bill Payment. It might be even buying gold nowadays, online gold. So there are so many aspects that you do. Now, every time you try to carry out a particular transaction, I'm emphasizing the word try to carry out, because that determines your intent from there on till the time you actually carry out a successful transaction. All data gets captured, and that is the alternate data that is getting generated. Now, starting from the registration of an individual. So let's talk about your demographic data. Let's talk about your geographical data. Let's talk about your age group. Let's talk about your KYC data that is getting fetched, which is your PAN data, which can be your Aadhaar data, which can be also your bank account data. If you're using a UPI PSP app where the fintech comes to know how many bank accounts you have, and including your bank balances. Okay. To the aspect where, if you are carrying out an IMPS transaction, if you are splitting a bill, then what kind of a bill are you splitting? Okay, are you dining at, a 5-star and splitting a 25,000 rupee bill between 4 friends, or are you dining at a, Domino's or a Pizza Hut and splitting a, 1,200 rupee bill between 3 friends, or are you dining at a, chai tapri and splitting a 140 rupee bill between 4 friends? Okay, now depending on that, and then basis, now even credit card payments are embedded into most fintech apps. So what kind of credit card spends are you doing? What kind of repayments are you doing? Are you doing full repayments or not? If you are not doing full repayment, then on the balance repayment, immediately you will get a personal loan where it says, hey, on the credit card you are going to pay 35% interest. Let me give you a personal loan at 11% interest. You are doing a saving of 24% over there. So how does this happen? This is because at every point in time your data is getting captured, and this is all alternate data. Okay, now let me give you an example of a merchant. Okay, a merchant who actually is owning a kirana shop, a Parchunika Dukan, and he is just ordering his stuff through a mobile app. Okay, so his distributor and his manufacturer is actually on the app. He will just open the app and he will order his stuff. every 15 days is ordering stuff. Okay. Now basis the business that he is ordering, that is the data that gets generated. Okay. Now the fintech which has created the app has also tied up with multiple digital lending entities that can be banks or NBFCs, who bases the past history of the merchant, not basis his CIBIL, CRISIL or bank account, but basis the past history of his invoices and the way in which he has been making the timely payment of his invoices, actually give him a real-time credit. Okay, now that becomes the merchant's working capital. Okay, now that can be 1% a month. Okay, and that's a fantastic product. Oh, sorry, 1% a day, and that's a fantastic product because the interest is so high for those, lending entities. And at the end of the merchant says, hey, I only want to use this for 15 days. And for 15 days, while, if he goes for unsecured product from an NBFC, not having his proper credit bureau data, he may end up paying 20 to 24% annually, and in this case he ends up actually paying maybe half of that. Okay, and it ends up giving him a product. So this is all alternate data based products that are getting generated. So guys, whenever you are using an app, okay, next time actually, and I want you to try doing this. If you have Alexa, if you have those devices at home, and when it's on, and when your laptop is on, your phone is on, speak about going on a holiday somewhere, talk about it, and then just wait for 15-20 minutes and log into your email and or just browse some pages, and you will start seeing ads related to that particular destination. Okay, and that is because the data that we are trying to feed into our daily ecosystem, it gets picked up, and this is the alternate data that gets generated. Okay. Slightly scary, but fortunately in India, our regulator is very strong and very much hand in glove with the industry. So the regulator helps us, decide on how best we can use the alternate data and, create products. Over to you, Samir.
Great. Thanks, Vaibhav. It was really the way you explained. I'm sure audience will definitely benefit out of this. So considering time, just a last question, and I would request Subramanya and Naganand, both of your views, because the question is coming as central to both an investor and a startup founder. So the question here is, are product-based startups still getting their due limelight with the investors? Or we've seen the couple of cases, the tech startups are getting fundraising and support, not the product-based. Yeah.
So I think I will take first, but then I'll hand it over to Subbu because he's been an investor and also an entrepreneur, so he's most qualified to answer this. I think the next decade will be quite good for the product startups in India. And like must have seen in the past 1 year, even large funds are looking to funding SaaS startups or product-based startups quite deeply. There's been a significant change in terms of product innovation being funded. And even if you look at, I kind of try and stay away from unicorn name as much as I can, but just to give a comparison, it's almost 60-40 between B2C and product innovation startups. And that bodes really well, means large amount of money is going. And I think as a economy, as a startup ecosystem, there's been a significant maturity in terms of our own ability to build a product. One thing you need to remember is when you build products, typically you're building for the global market. When you build consumer companies, you're building for the Indian market. So obviously there is a lot more maturity that needs to come in for the product innovation startups to kind of scale globally. But that is happening, and the past 3 years has been phenomenal learning experience. A lot of organizations where a lot of playbooks are being shared. So it bodes really well, and I'm very, very optimistic about where product startups can go in the next decade in India. Subbu, I'll let you add more if I miss something.
Yeah, look, at some level, I actually don't distinguish between product-led companies and tech companies, because today in this consumer internet-based world, it's very difficult to build a product at scale without a strong technology at the backbone. Like we might, let's say, if you look at, let's say, an Uber or a Swiggy, which is a product company, but the technology that is required to handle a few million sessions, concurrent sessions, is fairly large. And then you add layers of personalization, personalized marketing, blah, blah, blah. So every product company at scale is a tech company at the core. Now, my sense is that the person who asked the question was asking those kind of product companies, B2C companies versus deep tech companies. I think that's probably was the question behind the question. I agree with Naganand. I think the next 10 years is going to be more around, there's a larger market share we will have for companies that are using technology to solve a, an apparent real life business problem, and share of, what one would call as deep tech, product companies like an AI, ML, or a metaverse, or, those kind of things, I think will happen. But from the relative market share, probably will be lower than, those product companies that are using technology to solve, real life problems.
Great. Thanks, Naganand and Subramanya for your critical views around this. It was really important, and the way you've guided the audience. So from my side, the concluding remarks, we can try to wrap up this session quickly. I'll just conclude in a way that we like to personally believe that we are standing at a critical turn in the economy, and we'll definitely see we are the brink of truly addressing poverty, financial inclusion, and economic growth, which we have been discussing over the period of time. So I am personally taking away a lot of important points today. I would just request our panelists to speak on in the last 5 minutes on their thoughts on the fintech ecosystem, the way we've discussed on that. Over to all of you guys. Yeah. Why don't we start with Naganand first?
Yeah, so I think, like we said, the total funding for startups in 2021 was $35 billion, and obviously 10 billion, which is almost 33%, 30% went to fintech. And fintech is, everybody transacts something every day. It doesn't matter who you are, which walk of life you're from, which demography or from, you're always transacting. I think there's hence tremendous opportunity with the mobile coming in, digital first, mobile first capability, moving away from existing banking systems and making it a lot easier for people to get what they want almost instantaneously. It becomes quite important, and you'll see a lot of innovations coming down that way, and it's quite exciting space. Plus, I think there's got to be done and learned in DEPA. This is digital empowerment and privacy architecture. I think a lot of work is going on as to who has access to what data, how do you monetize it, how do you ensure that you get based on your data, you get what you need. I think there's a lot more work, there's a lot of learning that needs to happen in there, and that's an interesting area. At least I would like to watch personally to see how that evolves, and not only in India but across the world. Because when our startups build products, how do you now, each country will have its own set of architectures, and can there be a convergence? And that's an interesting space to watch as far as I'm concerned.
Okay, thanks, Naganand. Request Vaibhav to a concluding remarks.
Sure, Samir. So I think this space is poised to grow much more further and much more faster than the speed it has been growing today. There are a lot of opportunities. Somewhere I feel that the regulator will also bring in a model where financial institutions and fintechs can partner together, and there will be some kind of a regulatory structure that will be brought in. It also helps because it will empower the fintechs, which today have to rely largely on the financial institutions when it comes to regulated products. Having said that, the consumer is the king in this particular market, and finally it is the consumer requirements that actually translate into products. And banks are also now trying to, and let me dwell upon a little bit on the banking perspective. Banks are also now trying to, create their own fintech divisions. We recently saw a private bank, announce creation of a fintech division, and a lot of banks are actually trying to create their own fintechs or invest into fintechs. That's venturing into a very new era, because traditionally banks have been, let me call it very stiff, organizations, and then fintechs are quite the opposite, agile, nimble-footed. And today, when these two converge, the future is extremely exciting, Samir. So I think this space is poised to grow, whether it's payments, whether it's liabilities, assets, insurtech, regtech, compliance tech, whatever we name it. This space is going to grow in a very, very fast-paced manner. There are a lot of innovations that are expected in this space. Over to you, Samir.
Absolutely, Vaibhav. You rightly captured it. Thank you so much. Over to you, Subramanya, for your concluding remarks.
Yeah, sure. Look, India is a large country. We have 1.2 billion people. We have close to 900 million bank accounts, of whom possibly not more than 250 million people have access to high quality credit. Less than 50 million people access capital markets. Less than 10 million probably access a formal insurance. Just the sheer under-penetration of products offers a huge opportunity. And to me, this bridge can only be solved through technology. There's no way we're going to build physical infrastructure and branches, and that phase is gone. Both the consumer behavior and the cost of delivering services is so high. The only way we can get these services to these customers at scale is by having technology. And the second one is, I think I completely agree with Vaibhav, is there are incumbent players like banks, who are already present across the country. I think the second way in which this is going to be solved is by strong partnerships between fintech companies and banks. Banks have the regulatory ring fence. They have the trust of the customer. They have the fairly well laid out infrastructure, and fintechs can bring in the innovation, agility, other things that Vaibhav explained. I think the combination of this can actually do the magic of expanding the market access for a significantly large number of customers. So it's a great time to be in the overall fintech ecosystem, either as any form as a participant, as an investor, a regulator, or a incumbent bank, or a insurer, or as a technology company.
Great. Thanks, Subramanya, for your inputs also. We all agree to what we all have discussed in this session. It was really, really insightful. And thank you so much, everyone, for your time, for your inputs in this fintech startup ecosystem in India. Look forward to have an amazing 22 year. And thank you so much once.
हाँ कर सकते हैं, नहीं कर सकते, और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber, सिक्का चमकेगा.
Cryptocurrency is a non-regulated digital asset, not a legal tender and subject to market risks and price fluctuation risk.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू. हाँ कर सकते हैं, नहीं कर सकते. लगी शर्त, और हारा तो.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC.
Welcome to Fego, a pioneer in the world of intelligent open finance. With our full stack open finance platform, we enable companies to understand their users' financial behavior across various use cases, making finance engaging and actionable. Fago's developer-friendly product stack helps clients with friction-free user onboarding and authentication using trusted account information. Connect and aggregate your users' banking transaction data from any source, either any of the account aggregators or directly from any core banking solution at flexible intervals. Enrich and categorize transaction data using machine learning algorithms to extract deep behavioral attributes of your users. Understand and act on real-time insights powered by your users' behavior for a variety of use cases ranging from lending, wealth, income verification, frauds, to even branding and marketing insights. Engage with your users by embedding our personal finance management SDK in your existing user-facing app to push positive financial habits and personalize financial insights to your users. If you are looking to engage or understand your user base's financial behavior to take informed decisions, Fago is your perfect partner. With the complete Fago suite, you can now capture what drives your users at every stage of their journey and use it to drive your growth. Plug into Fago and let us do the heavy lifting for you.